Welcome back to Dukascopy TV. Today I'm joined in the studio by Alexis Paulet from 3V Finance, and we're talking risk management today. Alexis, thank you so much for joining me.
Thank you.
Now, first of all, can you tell me a little bit about 3V Finance?
Yes, 3V Finance is a software editor. We provide a risk management system. The name is Titan, and 3V Finance is a subsidiary of Volatility company, which is one of the world's largest brokers, Tradition, whose headquarters is here in Switzerland. And 3V Finance is a specialist in risk management system. Our customers are corporate treasurers and asset managers who wants to control and hedge their risk, market risk and credit risk, and of course operational risk.
I see, and there's been so many changes in the world of risk management over the last few years. Can you talk to me about the developments over, say, the past 10 years in risk management?
Yes, there are many changes. Of course, treasurers have always followed their risk, but IFRS norms change a lot of things because now the impact of market price volatility has to directly be input in the balance, and so we have to report it in the annual report. So risk management now concerns a lot of actors, such as auditors, investors, shareholders. So that changed a lot for companies who want to hedge their risk. So this is a huge change. And of course, the last years have shown really the importance of the risk management with strong and huge movement in the market price. And so now we can see how it's important to hedge the risk.
I see. Were you talking about volatility there? So how much of a hurdle is volatility within the industry?
It's very important because, in fact, the corporate treasury or asset manager has to follow the risk. But for corporate, they have already risk in the industry. They have a business, and so they have to hedge the risk coming from the market. And for that, they really have to follow the exposure. They have to know exactly their exposure, and they have to hedge in order not to be impacted by the market, but only about their business.
I see. And looking forward, what do you see for risk management in 2013 and indeed from 3V Finance?
There are a lot of things. First of all, risk management is very specific business, I would say, because the risk management consists to track, control, and follow the risk. And there is a lot of very difficult and tough subjects, such as stress testing, IS efficiency test, value at risk, cash flow at risk. And so this is very a specific subject, I would say. So, of course, unfortunately, it's not risk management a priority for some of companies, and we have even seen some treasurers who think about subtracting the risk management. So for us, the future, it will be really interesting to see how companies decide to follow and take care about their risk, because there are many types of risk: market risk, interest rate, forex, commodities, credit risk, of course, liquidity and operational risk. So the risk management will be a type, according to me, of indicator, and a sort of indicator in order to evaluate a company. So it will be important really to see how a company will manage their risks.
Alexis, thank you so much for coming in and sharing your insights. Just before you go, I want to ask you the Dukascopy question. So we ask every guest that comes into the studio, if you had $1 million to invest in the market for a year, where would you put it and why? And here are your options.
Okay. For $1 million, I think I will choose real estate, but for my family. not for an investment, but I would keep a little cash in order to celebrate.
Well, Alexis, thank you so much for coming in and sharing your insights with our viewers today. My pleasure. That's all from us here in the Dukascopy studio, but make sure you join us again on Monday for some more exclusive interviews. Have a great weekend.